All right, so apparently I am live. If anybody can see this, just bear with me a sec. Click here when live for stream, info, viewer counts and more. Okay, so that's where I've got my view count. Sorry guys, you're gonna have to bear with me. This is the first time I've actually been able to go live on YouTube. I'm just gonna check how this is looking. And I'm also just going to switch this and put my headphones in. How about that? Can you now hear me? I'm hoping you can now hear me. Give me a sign in the comments if you can. And how about that? Can you now hear me? Good. I'm hoping you can now hear me. Give me a sign in the comments if you can. All right. Sweet. So if you are on the call, that's awesome. This is the first time we've actually managed to go live on YouTube, because the previous 2 weeks I've been cut off both times by YouTube not allowing me to actually go live. So this is this is an achievement in itself. You can see we've got a few people on. For those of you that are on, if you could just drop a comment saying where you're tuning in from, country, city, nothing too personal. I'm not going to show up at your door or anything. Just to get a bit of activity going and see who I'm talking with. Also, I am noticing there is a bit of a delay with what I'm saying and the comments coming in. So with that, I will just bear in mind that if you guys do have any questions throughout this, yeah, you see, so I just got your comment, Mateus, Albania, awesome. I know we've got some people tuning in from Lithuania. Macedonia. Awesome. Cool. So some more Lithuanians. Fantastic. All right. So I've pretty much, I reckon I figured out the comments thing here. So I should be getting the comments live. I can close out of YouTube. You guys can't see that, but that's what I'm playing around with. Apologies for any technical issues. Again, this is my first time doing a YouTube live, but I hope to do a lot more in future. This is the first Sunday market breakdown, and yeah, there's going to be a pretty short agenda today because I did anticipate some technical issues. So I'm just going to go ahead and show you my screen, what I'm looking at here. So yeah, this is basically what we've got. So last week, in terms of trades taken and the trades I want to take, personally, I only took the one trade last week, and also closed out of some positions I had on for quite some time, like my pound-dollar sell from 2 weeks ago. I still had a runner on that. So I will get into that and cover it. But basically, the reason for closing the long-term trades was that they were running on prop firm accounts, and it was the end of the month. So I wanted to close out those positions, cash the profit in order to get paid. And that's basically it. I was hoping that they would continue on and I would use them a bit further down, but it is what it is. Profit's profit, and when you need to take it, you should take it. You know, nobody went broke taking profits. So that's my thought process on that. Now, getting into it, yes, we're going to run through trades taken in the previous week. Then there's a thing I want to cover from one of the members from the community. And the community, if you don't know, is Leveled FX. You can get there by going to school.com/leveledfx, or you can also access it through myname.com, jamesdownton.com/free. That'll bring you right here. And this is a free community where I'm sharing exactly what I do week on week in the Forex markets. It's still very new. We've got 161 members that have been added literally in the last week. So things are still pretty new here, but we're going to have a lot of stuff that's being added here. One of the main things being the Leveled Masterclass. This is something I've been working on for quite some time, and I've been gathering some feedback from the members recently, just to kind of see what level people are at, whether it's their first time trading or whether they've traded before, been a little bit burnt and not quite managed to get it working for them. The goal of the group is to have 100 funded traders by this time next year. So if you're interested in becoming a funded trader, you want to get yourself involved in the community. It's supposed to be a supportive place. I'm in there every day, giving feedback on trades and posting what I'm doing. And like I said, the classroom is a work in progress right now, but lessons are going to be dropping daily as of this week, now that I've gathered the feedback from the members as to what we're kind of working with. So yeah, 100 traders over the next 12 months, funded by proprietary firms. So you won't be trading any of your own money. You'll be leveraging the fact that you can take funded challenges, get access to capital, and then do an 80 or 90% profit share on that. So if you make 10 grand in a month, you're keeping 8 grand of it or 9 grand of it. Yeah, that's basically how it works. So if you're interested, go to school.com/leveledfx or jamesdownton.com/free, and you'll end up here. And yeah, it'd be a pleasure to have you in the community. So going back to it, let's get into the breakdown. We'll cover the pound Aussie stuff that Stephen in the membership wanted covering, and then I will move on to the weekly analysis for what we're looking at the week ahead. Sound good? This is the part where I'll try and get some feedback from the comments, but whether or not it will come in real time or not. All right, so let's move it forward. Hop on over to Trading View, and we're going to cover the EURCAD trade. And guys, these won't take long either, because you're going to very quickly see, I hope, how we're approaching the markets. So this was a trade back on Tuesday, the 25th of June. There are a couple of things at play here. Let's jump up to the weekly, just so we can get an idea of where we're at. This is where we always start to check ourselves before we wreck ourselves. So the weekly, impulsive move up, consolidating for the past 2 years, right? And that's not uncommon for the CAD pairs. So I personally really love these at the moment, and have done for the last year or so. The reason I like them is because they tend to swing. They swing high and they swing low, and there's a decent amount of pips to catch in between there, usually 300 or 400 pips. We're not after all of them, of course, but once you leave a running trade, it can become very interesting. And yeah, they do tend to work very nicely with pullbacks and reversals, which is what we're mainly looking at. So weekly, we've been pushing down. So we've come down from the highs, 300 pips, and we've not really had any solid pullbacks on the way down, not anywhere that I would like to trade from anyway. So jumping down to the daily, we can see that we've just been fading down. Zoom in a bit here. Push down, push up, push down, push up, push down, push up. So we're usually, when price action looks like this, we're fading somewhere the market wants to get to, meaning that the difference between an impulsive move and a fade, when things are fading, levels tend not to work as well, because as you're moving, let's say this example, we're moving down, every time traders are cashing profits. So the idea here is that, let's get my drawing tools up, wherever they've gone, there they are. So let's say we've got price and it's moving down like so. If price continues, it does a bit, if price is just doing this, right? What's happening here is traders are pushing the market down, then they're taking profits. The market's pushing down, traders are taking profits. The market's pushing down, traders are taking profits. So we don't really want to trade markets like that. What we want to look for is when price has moved, hardly any profit's been taken, almost nothing, it's like a pretty flat consolidation, and price has moved down into a level, let's say this one here, and then typically we're going to get a pullback. And it's this area here that we're trading. That right there, that's basically our profit. That's what we're looking for in the markets. So going back to EURCAD. These pullbacks have been decent enough to take at least 30 pips on each one. So when price came down to this area here, this was obviously a level that was used and had quite a strong reaction from. So price had broken through it before, so it smashed it here, but we don't look back too far in terms of history as to what price did back here. We want to take what happened recently. So the most recent price action is, you just look left. That's the most recent price action. So what's happening here is we're identifying the level. Price has moved away from it. Price has moved away from it for some time as well. So we've been here, that's a decent amount of time to have been away. 45 bars, 63 days. I can just take the date. So the 24th of April there. So it's been a couple of months since we've been at this level. And what we saw on the Tuesday, pop down to the 4 hour now. And let's replay what happened. So what we're looking at on the Tuesday morning, so it's Monday night, here we are. So yeah, this is Tuesday. Let's see what happens here. So we've marked up our chart. We can see that this is the level that price has reacted off. And if we are to get a strong move in, like so, with no pullbacks on the way down or very little, we're going to take this level and we're going to take it to the first area of struggle. So the level we're taking would be right here. I've just got a bunch of stuff on my screen, so it's a bit difficult to maneuver. But anyway, so yeah, we're coming down to this level right here, right? So if we just play price forward, I just want to show you this because you can't just take any level randomly. Price action moving in, which basically just means how price got there, what was the behavior of price moving in. You can see this is pretty solid down, and like I said, that's not really a pullback. If you were to measure it, 17 pips, reasonable, but given the fact that, where are we? So that's last week, Monday, Tuesday, so we're going to hit somewhere around here. So let me just speed this up a bit. There you go. So price moved in, tapped the level, and pretty much ran away off it straight away. And that's essentially what we're looking for. So if you imagine price was just kind of smothering this level above, and then it just dipped right down 70 pips. So that's a strong move in. And then immediately we hit our first area of potential struggle and took 35 pips off the trade. That's basically it. That's the reason that trade was taken. Nothing more. And prices continue to move away. So that's EURCAD. Just going to check to see if there's any questions. Nothing right now, or no new ones. Do you have any questions? Any questions about what I just showed you there? If no, I will move on. And if some delayed ones come in, I will go back to them. So that was the EURCAD buy. Now the pound New Zealand sell. Again, this was another great trade from this week. And was one of the guys one of the members in the community actually managed to grab this one, which was fantastic. Really great to see. So this one, as you can see here, I'm not going to go over it in too much detail, but again, hopefully you can see that without rewinding time, you can see we had this strong move up, 40 pips, and then a strong move into the level, and price just moved away. We hit it around 8 o'clock in the morning, which is quite common of Aussie-New Zealand pairs, just because of the time difference. And yeah, I think there was pretty much a quick, I would say 58 pips to the first area of potential struggle on that one, and then prices continued to drop. And I think price could continue to drop on that one. So for those who managed to grab it, the idea is that you cash 80% of your trade at the first area of potential struggle, and we're leaving 10 to 20% on to continue to fall. And the idea behind this is once price continues to fall enough, even though it's only 10 to 20% of your trade that you've left on, what happens is those trades tend to go 200 or 300 pips, and then they end up being bigger than the actual trade value that we cashed at the 80% mark at the first area of potential struggle. So it's also one for the psychology, because imagine when you see that you're in 2 or 3 trades and they're all 300 pips up and it's just the runners, you can tell yourself, I've already had my profit from these trades. I took 80% off the table. So I've already paid myself. Now I've got all of these other trades running, and I'm not even bothered about what happens with them. I'm just going to use them to protect my psychology right now, and that is I'm not going to jump into any kind of shit trade that comes up because I don't need to. And these trades, the green that you see on your floating P&L, will help keep you in a very grounded state where you're not looking to take random trades just to get into the market because you miss being involved. So I can cover more of that if you guys have any questions on leaving runners on your trades. But yeah, this was a really fantastic trade. I'm trying to remember, where did we get? I think it was actually in here. That's the one we're going to cover. I don't remember if it was documented in here. Yeah, so that was the other trade as well that we'll cover. Anyway, good stuff. So yeah, pound New Zealand, fantastic sell. Aussie New Zealand. This was a bit sketchy, if I'm totally honest. This was a trade that I did actually take, and I don't believe it was one of the best. It was valid, but there were certainly better trades happening during the week. Just so happened that this was the one I was on screen for at the time, and I had been anticipating Aussie New Zealand moving higher. But what I'm very aware of, if we zoom out, are the higher highs. So looking across here, we've got highs here, this level being used over here. This was the big sell level that price really moved off, right? And if you're going to be taking these kind of levels, you can take these ones all day long. The chances, if you've got a level like this and a strong move in, and you've got alignment of other things like average true range, which I will probably cover on this one, and hop back to the pound New Zealand to cover that as well. These are like almost a dead cert. You should be getting involved in every single one of these trades. The issue with the Aussie New Zealand trade is that price just kept on exploding up after each level. Every level worked. So I think it was Tuesday last week, I may have covered this one with the Aussie dollar trade, but basically we came in and hit this level, and that was the first area of potential struggle, which was taken. So there's 31 pips taken off Aussie New Zealand there. And then I tried to leave a runner, but it got taken out as we smashed up during the night. Then what happened is we started to come up to these highs. And this was also a decent level here. You see, we've got these kind of a strong rejection, long wicks. But one thing to note here is this was used more as a pullback level. And what I mean by a pullback level is we had price move down like this, and it was used as the pullback, right? Whereas this level here, we had price move up, that was the pullback level, and that was the reversal level. We reversed all the way down after that. If I zoom out, you'll see the difference. If you look at this zoomed out, that level looks a lot less a lot less significant. So where you want to be taking the trades as almost a dead cert is off the reversal levels. But you know, and you can find that by looking back here and looking back here. Again, this price action isn't recent, but it's, if you look left, it's the most recent activity we have. So we're going to use that data. All right, so what happened with this one? Price shot up. So we had this explosive move towards the level, and this can happen quite often. And then you can start thinking, oh, you know, traders are going to want to take their profits when this level gets hit. So I thought, you know what? That was a strong move for Aussie New Zealand. I'm going to give it a go. And if it doesn't work, I'm going to take a backup up here. How does the backup level work? Now, that's 80 pips away. So within my risk management, I've got to be comfortable with going into drawdown of 80 pips if this level doesn't work. I've also got to be comfortable with going a lot harder on this level And by going a lot harder, I mean, let's say on a 100 grand account, I enter this level here with 2 or 3 lots, right? 2 or 3 lots on the 100k account. This is probably going to set me back around 2 or 3 grand. If we come up to here, right? That's where I need my risk management to be. If I'm 100 pips away, it's going to be about 2 or 3 grand in drawdown. And I also need enough in my risk management to be able to go twice as hard on this level, because I'm going to want to take this level if this one fails. I hope that makes sense. So when this level actually gets hit, I'm going to enter it twice as hard, twice as heavy. And I'm going to, once I feel like this has hit the first area of potential struggle, which I would consider somewhere around here. If you look back, that's what happened before. We came down here, we did 47 pips off the move off, and then we pulled back and then we continued. So the runner would have been into effect at that point. But if we move in here, I'm going to be looking to take at least 30 pips off of this move. And when I get those 30 pips, I'm going to have to decide whether I think price is going to continue down and my runner is going to do its work. And if I believe that it's going to continue down, what I'm going to do is I'm going to cash 80% of my profits here. I'm going to let price come back to my original entry on my first trade. I'll probably close the first trade and then I'll leave my runner to run down. And that's what I'm going to do. So, but it's all it's all a little bit subjective and contextual. And you'll hear me talk about context a lot, because the time of the day, how price has moved, what it's done, how it's behaved, all plays into whether or not you're going to do a certain action or not. So, you'll do your analysis like we will today, but the levels we mark up are just levels that we're looking at for potential trading opportunities. It's not relevant until we see what we want to see on the day. So, the first thing being, we want to see a strong move in to the level. We want to see that price has moved, or let's say overreached in a given day. And that's another thing that we can cover here, is that on this 4 hour, we use the average true range to see how far price has moved in the day. And the average true range is basically, what price is expected, how far price is expected to move in any given day. For example, you're not going to look at a chart and think, okay, here we are today. I think we're going to hit this level down here by tomorrow. It's just not going to happen, because Aussie New Zealand is expected to move a maximum of 100 pips that day. And this is all based on previous data, right? So what we're looking for is when price has been smashed through that. So if I drop down to the hour, it might be a bit clearer. So here, this was, again, it's an Aussie New Zealand pair, so these things happen during the night. But what we're looking at here essentially is price smashing through the average true range, which indicates that price is basically overbought and due a pullback. So even though price didn't pull back really into the range, we kind of had this lapse over into the next day where price still did the pullback, but nothing special. So again, this was just very quick trading, 30 pips, cashed 80%, price came back, took me out, break even for the 20% I had running. And now I'm basically just sitting on my hands and waiting to see if we get this level hit up here. So one for the watch list this week will be Aussie New Zealand up at this level, right? So somewhere up here, because what are we looking at? We're looking at the strong weekly level up here, and that was a huge reversal point. In fact, it was the last reversal point. So that's all we're looking for. Are we clear? Cool. All right, so those were all the trades I wanted to cover for this week. If you guys don't have any questions about how they were approached or whatever, then I will move along. Just give it a minute. See a comment from Mihal about the trade on pound New Zealand. A comment here, what percentage of risk, from James, what percentage of risk on account balance on this trade are you taking, and is it leveraged? So by leverage, are you talking about the leverage on the account? If so, yes, it will be leveraged, but most of the prop firm accounts give you 1 to 100 in terms of leverage. Personal accounts I use only 1 to 30. I just don't believe that if you're properly risk managed, you need any more than that. And also, if you're in any more than 2 trades at one time, I think you perhaps need to rein your risk management in a touch. I certainly don't like to really have any more than 2 trades or 2 active trades that I'm in. Discounting any runners, I don't count those because you're just stacking those up. But yeah, in terms of risk on the account, it really has to apply to how you're going to approach a trade. So like I said on this Aussie New Zealand one, and actually we'll cover this in the pound Aussie thing that we look at in a minute, but I'm always entering a trade having a backup plan. I don't enter any trade not knowing what I would do if price action doesn't do what I think it's going to do. And that does 2 things. First one is it means my psychology's pretty sweet, because when I see price go against me, I'm like, okay, I've planned for this, right? So that stops you being emotional or irrational as a trader. The second thing is risk management. So it stops you from over risking on the first trade, right? So if I thought every trade that I took was an absolute banger home run, then I would probably over risk on it, thinking that, you know, this is the hero trade and it's going to bring me everything I've ever dreamed of, which isn't uncommon for traders in the earlier stages. But you just can't treat it like that. You need to enter trades and you need to be able to keep them boring. And by that I mean you almost need to not care what happens. And I don't mean be reckless with your account. I mean that the trade amount that you're taking off the table here in what's the word I'm looking for? The trade amount you take in terms of how big your account is should be in significant proportion. That was the word I was looking for. Jeez, it's a Sunday afternoon. Bear with me. So yeah, the proportion of your account size, what you're looking to take off a winning trade here, should be like, meh, whatever. You're just showing up, executing on your analysis, and when what you thought happens and it works out, you just got to be like, sweet, another day at the office, on to the next one. And equally, when price goes against you, you got to look at it and be like, you know what, I've got a backup plan for this. It's not ideal, but it is what it is. And often, if price hasn't made a pullback, like for example, if we go all the way up here and price still hasn't made a pullback by the time we get here, it makes that level that much more juicy. So yeah, but just have in mind that that's why we want the strong move in, because we want it to be obvious. If it looks like it might not pull back here because the move hasn't been strong enough in without any profit taking, then I would just avoid taking that trade. So just catching up on your thing. Yeah, exactly. Don't be a hero. Yeah, sweet. Good. So backup plan needed on everyone. Michal says, what if you go heavier on entry number 2? Actually, let me try this feature. Ta-da! Look at that, eh? What if you go heavier on entry number 2 and it still goes against you? Well, at that point, you need to decide contextually what's happening in the market. So I won't cover, it's a little bit out of the scope of, of this YouTube live, but essentially, if price continues to go against you after your backup plan failed, you have to accept as a trader that you were wrong at that point. And that's totally fine. But you will find if you trade with the rules and the approach that takes into account context, you will find that this doesn't happen to you very often. Because, this last week, there were 3 trades. The week before, I think there were 3 trades. Yeah, and that's more than enough that you need. So the idea as a trader is to almost do as little as possible and not be involved in the market unless you absolutely have to be. Like, I would rather sit on my hands and not be involved and do nothing. But if I see something that I've said on the Sunday when I've done my analysis that, wow, if we get a strong move into this level, like that Aussie New Zealand level up there, if I don't want to trade today, but I see a strong move into that level, I have to take that level. And that's the point. It's kind of like the market tells you when to take the trade, not you. You don't decide. You have to execute on your plan. So I'll cover the exact scenario that you had, Michal, in during the week with your pound Aussie trade now, because I think that would be a nice move on from what we're currently looking at. So this is the GA move here. I'm going to go to it in the group. Let's have a look. I think you called it something like didn't go to plan. Tell me if I went past it. There you go. Pound Aussie didn't work as expected, my new plan. So this is the type of thing that happens in the group. We've got the original analysis here. So we can see that we've entered at 1.9096. So I'll just pull that up on the chart so we can go through it. G8. And tell you what I'll do. I'll just remove all my stuff. 1.9096, I believe it was. You have to bear with me, guys. I've got a bunch of stuff on my screen for the live recording that I have to keep moving around. So that was your first entry, from what I believe. And your second one is at 1.90474, is that right? I'll let you guide me on this, Michal, if you've got anything to add. Was it the first entry you took, or the first and the second? And then I think you took the lower trade. Correct. Right. Sweet. Okay. So yeah. So back to the chart. So first entry was here. Second entry was at 90474. 90474. No, 1.90474. Cool, okay. So let's have a look at this and what you were thinking. So this level I would have been in on there. not exactly where you are, but I think what you've done here is you've taken price from a little bit further back. I would have gone on the candle body close of the 4 hour there, that being the strong level that we came into, and because that's where we moved off from, right? So that would be where I would have put my level on there. But I can see your logic here. Price came down, it was a strong move, and we'd basically gone past ATR, right? Price went past it, pulled back to the level, so it smashed the level and then used it as kind of like to push off from again. So it pushed down, pushed off, exactly off the level, and you would have had 8 pips in profit at any one time there, I think. So you decided not to cash that because it was only 8 pips, so rightfully so. So your idea was price came down, average true range was hit, breached, you entered just before it hit, and you got nothing from it. Then, so that was around 2 p.m. that candle body. Then the next day, price went against you even further, but you had your backup plan. You had your entry 2. That's the second white line here. Now, this is a perfect example of the backup plan absolutely smashing it and making you more profitable from having price go against you. So Michal knows what he should have done at this point. Yeah, I know it was a buy trade. So because price moved, so price moved in, and obviously just for anybody that wanted clarification on that, yeah, it's a buy trade, so we're looking to go in this direction. So that was the first idea. So price was supposed to come up here and everyone's happy. It didn't work out. Price went against Michal, but look at this for second entry. Absolutely nailed it right here. So pinned him just there. What did price do? You go twice as heavy on this level, and what do? You take it to the first area of potential struggle. We'll be back to this level here, right? Which we did. So price came all the way back to Michal's first entry. So this first trade would now be at break even, so $0 to take off the table here, and this trade would now be twice what he was looking to take off of this trade. But what happened? Michal thought, well, let's see if Michal's got any comments on that. But I know what Michal thought, because this is what everybody thinks. He thought, you know what, this is pretty good. I'm sitting in this position, twice as heavy, and what I'm going to do is I'm going to hang on to it, because I think there's some more in there. And what Michal thought was, we're just going to keep going, so I'll keep my original trade on, and this trade, and now I'm seeing numbers that are making me quite excitable. But what price decided to do at that point was actually go against Michal once more. So even though price had offered Michal a perfect scenario where what I just explained would have worked out, greed kicked in and he went back the other way. So that's what should have happened during that, but it didn't. So Michal was actually quite lucky on this trade, because sorry about that if you heard that background noise. It's like a raceway out there today. So what happened after that is, let's go back to it here. Michal created a backup plan, which is fair enough. 1.8945. So it's now 1.8945. And what happened here, Michal? Did you just? I think what happened was, that's the level you've got in your analysis here, 8945. Price didn't get there because it got to the level I have marked up, which is this one here. and then came all the way back to that entry he had. So what I'm guessing happened here for you is that you hung on for dear life as this second trade pulled back, and then it came all the way back up to your initial trade once again. Is that what happened? Let me know. Anyway, the long story short is Mahal got out of this one because obviously price came back here, bounced off this level, and went all the way back up to here, where I'm pretty sure from his analysis he actually ended up closing there, because in the end I know that it was a break-even trade for him. Why was it break-even? Because price went against him, so it went backwards, but he went twice as heavy from this level, and so he closed that in between. So then this level, getting out of the trade here, was actually slightly profitable for Mahal because he'd made a loss on this trade, but the trade was smaller, and he'd gone halfway back to the original position with a bigger trade. So managed to dodge that one, but obviously the first thing he should have done was use the backup plan and taken it once price had come back to break even, not just try to hang on for even more. Once you start doing that and greed kicks in, that's when you really lose your shirt. So that was the pound Aussie thing. Was there anything specific you wanted me to cover, Mahal, on in terms of risk management? Okay, so what's going on is closed number 2 as it hit number 1, but didn't close number 1, which went against him. Gotcha. Okay, so you were in profit on the first trade as it came back, but you left the first trade open. Sweet. So is there anything you would do differently now, having done that? Having gone through that experience, would you have approached it any differently? And it says that this new plan didn't work out, ended up closing that one at a loss. But I know from your trading history in the group that you actually did come out of that one on top. Mahal actually was kind enough to share his trading history in the group here, and as you can see, that pound Aussie trade is in here, GA. So there you go. You lost the 31 pips here, minus 31, which was €3.92, and then the 34 pip gain here, 17.5 pip gain here, and obviously went a bit harder on those, twice as hard exactly. So followed the advice to a T, and things worked out in the end. So yeah, nice job on that. Any questions? Any more questions, I should say? Okay, so one other thing is, what do you do when your backup plan doesn't work out? The answer is you close your trade, or you assess whether or not, well, this is the thing, right? If your backup plan, the level still gets a little bit of drawdown, you need to have predetermined how much drawdown you're happy with the backup level getting before you enter it, before you enter this trade in the first place. So yeah, I don't have any other thing to say about that other than once your backup plan fails, you just have to come to terms with the fact that your trade didn't work out, and not all trades will, right? But we're talking about a 90% plus win rate here, not, a 50-50, and we're looking for risk reward. You won't hear me talking about risk reward just because I don't believe in it. I believe in probability of price pulling back. So once that happens and there's enough in the trading opportunity to take off the table, meaning where is the first area of struggle going to be? If I can see that and identify that as an opportunity and it's large enough to take the risk on the level, but if it's going to be for 10 pips, I'm not going to, risk price going against me 100 pips. I want at least 30 pips. It also depends on the pair. Some currency pairs move a lot faster than others. Like, for example, the Swiss pairs, I'm not interested in taking any Swiss pair unless it's a significant level. And I mean significant. We can look at the trade from last week on that. Look at this. So pound Swiss in a day, if we go to the daily chart, well, here, a typical day is 50 pips or so, right? It's not a big mover. Here, 56 pips. So kind of moving between 50 and 60 pips a day. And why I'm not interested in taking like an intraday trade on that is because price would need to pull back more than halfway in order for me to take 30 pips. And I'm looking to take them relatively fast. So the only way I'm going to entertain getting into a Swiss pair is if it's a big level like this. I'm not doing anything in this area here. This area for me is significant because price moved off it in a big way, didn't come back and continued to push up. So when we had this strong move down, like we did around the 17th, 18th of June, that was a great trade and it was taken. Also, it was identified by Mihal in the group, and I believe he was on that one too. So yeah, these are the type of trades you want to be taking. And yeah, you're talking about the lag. So just going back, yeah, Mihal said he would have closed everything on the first trade. It's not worth bothering with additional analysis in hope to recover. I made a mistake the first time, recovered, worked well, and I would just close everything and forget. Perfect. I think that's all you need. That's all you can do from it, and move on. Just free up your psychology. Capital protection first, psychology protection second. Everything else is whatever. You've got to protect the capital and you've got to protect your psychology. You can't trade if you're in a state of fear or greed. But yeah, so that's that. What else do we want to have a look at? I guess we can get into the market outlook for the week. We've got 5 minutes left, so I'm going to run through everything real quick. So on the Sunday, you know the drill if you've been in the group for the last couple of weeks. We're essentially just looking back on trades taken, which is what I do on this call right here, to get us into the habit of actually doing that, making sure that it is done. The only way you learn as a trader is to document down what you did. Also document down what happened and you didn't do, because that's an opportunity to improve next time. And so on the Sunday, we're just literally running through the market and we're identifying any key levels, adjusting any levels that need adjusting because of what happened during the week. So I'm mostly just going to go through on the daily. Pound Aussie, these highs could be interesting this week to take a trade from. Really what I'm waiting on is this level here. I kind of hope that Friday we'd have this point here, and just pop an entry on that after we did our stuff. So that's where I'm looking to enter on, any time this week really. I think we should see a reaction off of that level. Why? Look at it. That's the reason why. It was a level that was used and we pushed off of last time. I don't need any more analysis on that. That's why this is all about levels. If that level fails, what am I going to do? Well, I think we have to accept that if there's an acceptable drawdown, we just hold until it does actually react from the level. we can go back and we can look at what happened in the past. Let's see, this level was used here. What was the drawdown? 43 pips or so. You see that? And then what happened? Then we moved 400 pips. So again, this is why I mentioned earlier in the week about stop losses. Why you just don't want them anywhere near your strong levels, because the market's just going to whip you out and then just run off without you on the train. So you're on the right train and then you got kicked off before it left the station. So even though we've had a near miss on this this level, and the near miss being here, I still think we haven't seen a strong enough reaction from it, because the price here in one day moved from up here all the way down like this and missed the level. So I'm still expecting a reaction off of that, probably up to these highs again before heading down, and then the lower level would be great. GN had the move on Friday that we covered. What am I waiting for on this lower level? I'm not really interested in getting involved in this area here. We've just been stuck in this consolidation area for quite some time, and that level's been done 1, 2, 3 times. These levels down here, 1, 2, they've been done. So yeah, now I want to see a breakout either to the upside or the downside, and again, I don't care which. I'm just going to watch what happens, set my alerts and see. Pound dollar, took this one from the top. First area of struggle, we took 80% of the profits off here. As I said last week, I closed my runner, which was 20% here. I closed it at around, on the $100,000 account, I think the take profit around that was around 200 pips. I think it was 217 from memory. 214. So decent move, and yeah, I think the original one on the 100k there was around $600, so call it 0.6%. And this one here, by the time I'd taken that off the table, I think it was around the 900 mark. So from one trade, it was yeah, $1,500 and 1.5% for the month from one trade. So that's what can happen on the runners. And if you're not at all excited about 1.5%, I honestly don't believe you will make it long term as a trader in the industry, because typically real traders don't make 20% in a month. Any big bank will tell you that, but the dreamers out there, let's not kill their dreams just yet. So anyway, pound CAD, this was taken from the top as well. Unfortunately, I lost the runner on that before price actually moved away. This waiting on the level down here, not really interested in anything in between. If we pulled all the way back up again, maybe there's something around here, but again, it just depends on how price gets there. Pound Swiss, we still continue up on this. If we were to come up to this level, that could be worth a try. Just depends how we get there. If we have a strong move in, makes it far more likely to be a decent pullback. But as it's a Swiss pair, I would probably just try and avoid that. And I don't know why that's moved up there. I would much rather wait for the level up here for Swiss. CAD Swiss, that's how that looks. CAD Yen, drifting on up still in the yen pairs. There's just nothing above. I'm just holding off touching any of these right now. Euro Aussie. Also bear in mind, guys, I haven't mentioned yet, but we are at the start of a new month, which means Friday will be NFP day, I believe. I haven't actually checked yet, but usually it's the first Friday of every month. So we could be very flat in the markets until then. It just depends if anything else is going to help us get moving in that time. Euro Aussie, waiting on this level down here. I've got the green box down there for you to see that. Euro New Zealand, kind of followed pound New Zealand from last week. So again, I'm waiting on down here to get hit. Not interested in anything before. Up here or down here. That's my analysis. EURCAD. Still moving on down on this. We haven't broken, I don't think we're making higher highs on this. So again, that entry's done now. If I can select it. No. My God. So for me, depending on how we get there, that level might be worth a go. We're quite far off it, so if we had a strong move in, 100 pips, that could be taken up to the next level. What have we got in that? 30 pips. It's worth doing, but the one to really hold on for is going to be this one down here. That's where price really moved off last time, so if you can hold on for that one, that would be decent. Euro Swiss, same as the other Swiss pairs. Euro Pound, not interested. Euro Dollar, waiting on the lower level on this one as well. I was thinking we might get there this week. Would be nice to have a trader for this. Again, why? If I zoom out, hopefully it starts to become clear what I'm looking at and why here. Euro Yen, Yen pair, again just drifting on up. Not touching them at the moment, don't understand what's happening. And if I don't get it, I ain't getting involved. Aussie dollar is really messy. Yeah, kind of a bit tired of the Aussie pairs at the moment. Aussie dollar is just doing that, so I don't know if I'm really interested in taking the high on that. We'll just see. If price was to push up, it might pull back into the consolidation again. But it's not a super clear pair, so when that happens, just there's nothing tying you to it. You don't need to get involved. Just leave it alone. Use it as a complement for something else that looks clearer, like Aussie Swiss, for example. Like that's a decent level. If you got a nice move into that, you can see I've got my alert set near level, and also down here alert set near level. That's it. Anything that happens in between, I don't care about. Aussie CAD. Pity we pulled back from that one a bit early last week, but I was interested in taking the level off the top there. Aussie New Zealand. Again, looks like we want to move higher on that one. To pull back now, either we're going to push on back up, or we're going to come back here because we've just been messing around in this area. So either a pullback to here, but not really it's not a level I would trade, or this is the level I would trade from up here for a short. Aussie Yen, again another Yen pair. Did look like there was a small reaction off that, 30 pips or so. Yeah, off the level, but nothing crazy. New Zealand dollar kind of looks like it wants to drop lower, come down here, and this level will come into play. Got a notification on that. New Zealand CAD, this one's doing the fade of death. So we've come down, we've hit the level, I believe. It did, or has it just missed it? That would be in for me because I'd have my entry just above. But yeah, it's done the move. So New Zealand CAD worked off the level. It's another, let's say another missed trade. I don't know when that one hit. Maybe it was on Friday. So yeah, I was already gone for the day by 4 o'clock. New Zealand Yen, dollar Yen. Let's clean up some of these levels. So like looks like a guitar in here. Not interested in any of those. Just messy. That's it for me on dollar yen, dollar CAD. What have we got here? Probably less interested in that now. More interested in the levels further away, like if you were to move up here, that could be interesting. Got a notification up there. Also, if we were to move lower, not a huge fan of that level, to be honest. The only reason I did mark it up before is that we had the big move off of it before. So, but I'll leave the level there just to see what happens, but it's not a tradable area for me, at least not the first week of the month. I'm looking for more prime opportunities than that. Clean sheet, ready to go for the month. So dollar Swiss, and you see the level worked here from over here. Boom. Almost no drawdown as well. Yeah. It's just things playing out nicely. Swiss yen, another yen pair. Just not interested in that at all. And then the positioning on the Dixie. I was sort of thinking that we would continue moving higher on this. And I still think that may be the case. But whatever happens, happens. So yeah, more dollar strength will push us down, and then obviously stocks will help drive that as well. So stocks have just been going up and up and up and up and up, as they do. If we see stocks start to crash, that could help get the market moving, because typically if the stocks crash, that's people selling stocks, and when they sell them, what do they get? They get dollars. So that strengthens the US dollar, and then you see pairs like pound dollar, New Zealand dollar, Aussie dollar, euro dollar, all going down because the dollar's strengthening, and you'll see dollar yen, dollar CAD, dollar Swiss all moving up for the same reason. So that's how these things correlate. But that's it. That's my run through of the market. Again, nothing special. We're just waiting on levels, and when those levels get hit, we execute on our trades. And yeah, that's basically it covered. So we're at just over an hour now, 1 hour 7 minutes. So yeah, thank you everybody for tuning in. I'll just give it a minute if anybody does have a question. Otherwise, I'll wrap it up, because I do usually allow only 1 hour for these, and appreciate you guys have got other things to do on a Sunday, as have I. But it's good to do our analysis together, make sure it gets it done. So I'll just wait for the lag. If there is anything, let me know, and I'll cover it before signing off. Whilst I'm waiting, one more plug for the group. If you haven't joined Leveled FX already, this is the community that everybody's jumping into, and yeah, full training on everything that we're doing here. It's kind of cool. It's on the school platform, which means there's gamification built in. So you know, if you reach a certain level within the group, which is doable by interacting with other people in the group and earning points by sharing your trade setups, by asking questions, by replying to other members, just being helpful, you earn points and you move up the leaderboard. And that kind of looks something like this. So as you move up, you gain points. Once you get to level 6, you get free one-on-one mentoring from me. And level 7, I'm actually giving away funded challenges. So I may even increase this or decrease the friction towards getting it. Again, my goal for the group is to create 100 funded traders within the next 12 months. So if you'd like to be one of them, you're not going to get there without taking action. So feel free to join the group today, and yeah, I'll see you in there. Haven't been any more comments or questions for now, but if you do, you can, and you're watching the replay of this, you can always drop them in the comments below, and I'll be sure to get back to every one of you. Other than that, I will see you in the community, and thank you again for tuning in. See you guys.